And then I think when we see the ETF embrace by the SEC, approving these 11 spot ETFs on January 11th, including BlackRock and Fidelity and Franklin Templeton and some of these really big asset managers. I mean, these are people that really did criminal activity, in 2008 and took huge advantage of these mortgage obligations that exploded, these debt obligations that exploded, and really hurt a lot of people, the working class, in a really, really serious way. And now these are the people embracing Bitcoin as if it's this kind of anti-state, anti-government, unseizable asset. And it's like, okay, well, I think we should pause. And
Mark Goodwin is a proud Bitcoin investor and the editor-in-chief of Bitcoin Magazine, the oldest source of information on Bitcoin. Like every other Bitcoin investor, Mark takes a lot of pride in positive developments impacting Bitcoin and its growth in all corners of the world. For many Bitcoiners, the approval of several spot Bitcoin ETFs by the US Securities and Exchange Commission in January is a huge positive for the leading cryptocurrency and the entire digital assets industry. Investors in this category have argued that these new products will cause significant price gains. Mark disagrees and chooses to approach the matter from a completely different perspective, weighing both the pros and cons of large Wall Street players like BlackRock getting involved in Bitcoin. Though there are pros to having the world's largest asset manager on board, especially after its CEO criticized Bitcoin for years, Mark believes the cons are far too great. During a recent interview with Peter McCormack of the What Bitcoin Did podcast, Mark gives deep insights about why BlackRock and Larry Fink are not as great for Bitcoin as many people think. Mark takes a deep dive into the making of the asset management firm and how it swiftly rose to power upon the tears and agony of many investors, homeowners, and taxpayers during the great financial crisis. Therefore, it goes without saying that the investigative journalist does not trust BlackRock with Bitcoin, an asset that was created to check the excesses of the same industry BlackRock and Larry Fink represent. We will now bring you clips from Mark's interview with Peter. As we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also join the conversation by dropping your thoughts, comments, and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth.
So Bitcoin Magazine was doing a lot of ETF coverage because it's a really popular thing. People are really interested in this. And it is, of course, a state change, as to how the U.S. regulatory system looks at Bitcoin. And now we're seeing these huge institutional players. There was a lot to talk about. But I got really concerned really quickly at the way that people were just kind of not thinking at all adversarially about the ETF and people like Larry Fink and BlackRock coming into the Bitcoin space and being basically welcomed with an orange carpet. Just come on in, man. Like, let's go, Larry. Come on, Lawrence. And I thought people kind of needed to be reminded of exactly who this guy is and how he got his start and what his plan is and and how quickly these things change, right? Like, he was kind of an enemy of Bitcoiners very recently, talking about ESG and carbon credits and all this stuff. And all of a sudden that's just completely forgotten. And so, really wanted to kind of just see the things that he had done in the very recent past, talk about how he kind of came up, in First Boston and creating the first CMO and his taking advantage of the 2008 crisis and all this up until the modern day. And then, of course, literally in his discussions about the ETF, saying these quiet parts out loud about how Bitcoin is a technology for asset storage and how it's an asset, not a currency, and how if we can tokenize an ETF of Bitcoin, what else can we ETF? And there was just a lot of things that he said right away that no one I really, really thought caught. And so, yeah, we wanted to kind of make sure we did a really nice retrospective of Lawrence and BlackRock, and kind of point out these things that, he's really clearly saying that this is their plan for kind of how they want to use Bitcoin. I think it's definitely a signpost that, like, okay, Bitcoin is officially being embraced by the U.S. regulatory system, the U.S. financial system. This is definitely, maybe no longer is this really a counterculture or a sort of a revolutionary counter financial system when it's being very embraced by the biggest players, specifically, right? BlackRock, JP Morgan, Jane Street Capital. These are the participants within the iShares IBIT product. It's I think we should be concerned, at least as to where it could go. And then I think when we see the ETF embrace by the SEC, approving these 11 spot ETFs on January 11th, including BlackRock and Fidelity and Franklin Templeton and some of these really big asset managers. And then you look at who's holding and helping, the authorized participants that are helping with these ETFs, like JP Morgan Chase. You're seeing the biggest players in the US financial system and the US dollar system, which really is, a private kind of public blurring. It really is a private capital creation system. And these are the banks and these are the asset managers that really control the dollar system. And here they are embracing Bitcoin in a huge way. And not only that, they're bringing, 200,000 plus Bitcoin. If you're not counting GBTC, which is already almost half a million Bitcoin, they're bringing in 200,000 Bitcoin, back to being onshored and within the border and within the regulatory arm of the United States. So all that to be said, yes, it is something I think in there's a 3%, celebration of wow, look how far we've come. This is crazy. We've really been embraced by the institutional system. And then 97% of but we've been embraced by this system that's really done a lot of damage, right? These are people that really did criminal activity in 2008 and took huge advantage of these mortgage obligations that exploded, these debt obligations that exploded, and really hurt a lot of people, the working class, in a really, really serious way. And now these are the people embracing Bitcoin as if it's this kind of anti-state, anti-government, unseizable asset. And it's okay, well, I think we should pause. And
during the interview, Mark gives a brief history of Larry Fink and how BlackRock became the multi-trillion-dollar giant it is today. Before we listen to Mark's insightful explanation, here are a few insights from a Bloomberg article from 2018. The piece, written about a decade after the Great Financial Crisis, is titled BlackRock's Decade: How the Crash Forged a $6.3 trillion giant. The first paragraph reveals that BlackRock is one of the few firms that made remarkable gains amidst heavy losses incurred by investors, homebuyers, insurers who made reckless bets, and most importantly, American taxpayers who shouldered billions of dollars in bank bailouts. Another section of the article reads, BlackRock Incorporated, the world's largest money manager, may never have grown as far and as fast as it did without the unprecedented changes brought about by the recession. The business now towers over its competitors. The article further reveals that BlackRock's good fortune was spurred by the rise of exchange-traded and index funds and the government's scramble to prevent future crashes. Was this a case of a firm taking advantage of a bad situation, or is there much more to the situation? Here are more clips from Mark Goodwin.
What I wanted to kind of bring up earlier with Fink specifically is that, he's been doing this basically this tokenization or paperization, this ETF kind of idea before any of those things existed. He was doing this 50 years ago when he first started at First Boston in 76. He was the first Freddie Mac bond trader. He was kind of starting the mortgage market. It was a really, really tiny thing. It was a very niche market in the mid 70s. And then by the early 80s, he was the first trader, to put a computer on the trading desk in 82, 83. And he actually created the first CMO, the collateralized mortgage obligation, which is basically, the first way to basically break up cash flow of mortgages and repackage them and sell them, and using, computers basically to actualize this, this mechanism. So he was doing this, basically 50 years ago, 40 years ago, depending on when you want to say he started. And now he's really grown into being this, his baby, other than basically creating this debt market, this mortgage market, was bringing computers into onto the trading floor and basically creating, this entire digitalized, trading market and risk management. And of course, now there's the huge Aladdin computing system that upholds, I think it's like above $50 trillion of assets are basically, using the Aladdin system for risk management. And this is a system that they've been building for an exceptionally long time. So you start to look at all these things that are happening now, like digital IDs and tokenization and fractionalization and, all these things that we're sort of getting at in this piece and that you're beginning to see people talk about in a real way. Fink was doing this, well before BlackRock even started. And then, of course, with BlackRock, they take advantage of this, basically the market that he helped create when he created the first CMO in 1983. Then we have the CDO, which is basically just a modernized version of that, collateral debt obligations. And that explodes, in a huge way at the end of 07 and 08 and 09. And we actually see BlackRock enter, they were really a bond and fund company, and now they pivot entirely into being an ETF company, purchasing the iShares brand from Barclays. That actually happened because Barclays didn't want to take a government bailout in 09 from the UK, and so BlackRock comes in, scoops it up for a few billion, and then a year later, there's trillions of dollars in their ETFs and this iShares brand. Now they're the biggest ETF issuer in the world. So Fink creates a market. The market explodes and blows up in 07 and 08. And then he takes advantage of the explosion that happens in that financial crisis to buy up basically the new inflows of what the American market really begins to trade, which is of course ETFs, which now are the dominant kind of vehicle for speculation. So he blows up the bubble, pops the bubble, takes advantage of the bubble popping, buys up this iShares brand that is actually the brand that is now running this Bitcoin ETF. And all of that comes from, things that he basically started, 50 years ago. So this is a really long time coming of Fink, bringing the computer onto the trading desk, cutting up these cash flows and mortgages, and now, moving into the ETF space. And he straight up says it, like ETFs are going to basically be the future of everything. We're going to ETF everything. And we're going to use Bitcoin to basically create some sort of data storage and have this universal ledger that we trade and settle all of these tokenized, trade funds on, these ETFs. So, he's been working on this for an exceptionally long time, and we're seeing all the pieces kind of fall together. It's really fascinating.
According to Mark and popular investigative journalist and writer Whitney Webb, every crypto investor and other advocates of a free financial system must be aware of BlackRock and Larry Fink's true intentions. Mark and Whitney believe BlackRock is working on creating a new financial system that would lead to the fractionalization of not just existing assets and commodities, but the natural world, reducing most living things to Wall Street financial products under the complete control of a single entity. In essence, BlackRock wants to make everything into an ETF that would be completely under the control of Fink and the rest of the 1%ers. Whitney and Mark also warn about the rebranding of certain individuals like billionaire Elon Musk and Javier Milei, the president of Argentina. They warn that these individuals are presenting themselves as one of the masses and masking their true intentions while being completely in bed with the rest of the global elites. What are your thoughts on Mark's reveals about BlackRock and Larry Fink? Please share your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.